How are we doing, guys? And welcome back to another episode of Traders Lounge. We've been receiving tons of messages on how to capitalize on the market when it's over or underperforming. We speak a lot about seasonality and commitment of traders reports, which we won't go into too much detail today, but we will show you how to take advantage when a market is moving. From the VIP Telegram group, we've banked, I think, 424 pips. We've still got a couple of trades running live as we speak. So not a bad week. A lot of our focus has been across the indices rather than too much in FX. One currency that we have taken full advantage of is the pound. We've spoke about the pound being under pressure. Away from Brexit and a couple of other factors, there's no real fundamental reason that the pound has been under pressure. Just seasonally, May is not a great month for the pound. If we're looking at pound yen here, we can see that the momentum has definitely changed. There was no real buyers or sellers taking control of the market until we entered this period of May. We saw our first lower higher price moving below the 200 moving average, which is a significant factor. Now, for a lot of traders, you can see here the last 6 days have been selling off, and being an end of day or a daily time frame trader, you wouldn't have found a high probability early entry setup. So we teach a core strategy on our live trading days, our courses, and across our one-on-one mentoring, which is pretty much taking advantage of when the market's moving. So as I said, I won't go into too much detail, but we can see we have a 20, 50 and 200 moving average across the charts here. Once we identify a strong sell-off on the daily chart, we can see each time price is pulling back into our 50 and our 20 moving average, we're seeing bearish price action leading the way, giving us several entries. We can see price drops to the downside, pulls back, gives us a higher price to sell at, same again, same again. The reverse, and we've seen Euro has been typically strong around this period, and again for the last 9 or 10 days we've seen a very, very bullish approach with Euro Pound here. Again, we've seen a bit of a messy double bottom form and then price reversed to the upside. Again, if you wasn't looking at a buy limit order or working off a key level here, you would not have found a early entry, again a high probability setup. So by using the smaller time frames, which cycle more frequently, provide more bars, more opportunities. Once we saw price break above the moving averages, again, you're seeing that same movement of higher highs and higher lows form, using the 20 and the 50 moving average, in this case, as your entry points to then buy. So it's just looking for clear bullish price action to lead the way, and there was 7 or 8 opportunities on this pair, whereas on the daily chart, you simply had none but a real bullish run. So again, this is what we teach on our courses, our live trading days, and across our mentorship programs. Another way of taking full advantage of the core setup is by being fluent with identifying phase changes across multiple timeframes, which is what Atif will take you through now.
So as you mentioned before, we can use the smaller time frame to indicate when there's going to be a phase change in the higher time frame. Now the example I'm going to use here is New Zealand yen on the 1 hour. A chart we looked at a few weeks ago. Daily's in a downtrend, and what we look for is what we look to do is drop it to the 1 hour and look for the opportunities against the 20, the 50, 20, 50, which we've highlighted before. As well as getting a seller confirmation bar here, what you can do is drop down to the smaller time frame and look for a change of trend there. A change of trend on the smaller time frame indicates a change of phase on the higher time frame, which in this case would be the 1 hour. Okay, so I'll show you an example on the first bounce here, which is over here. Now this is the 5-minute chart over here, and you can see it's in an uptrend, which means we're in a phase 2 on the 1 hour. Okay. So we get the higher highs, higher lows, higher highs, higher lows, and then this is the first break of cyclicity over here, and this is giving us that sort of confirmation. Okay, sellers are going to come back in. The phase 1 is likely to change, or phase 1 is likely to start, and see this quick retest and price falls. Okay. Same. Well, go to the next bounce, which was highlighted on the 1 hour chart. Again, you can see the higher highs, higher lows, break of cyclicity, price falls. Over here, we have a double top, reversal pattern.
Yep.
And again, price falls over here. Price falls quite a bit. And last examples, again, higher highs, higher lows. First lower high, bang, goes down. Nice head and shoulders pattern here. Again, another reversal pattern, and price falls again. So you can use this on every time frame. So it doesn't have to be the 1 hour. You can use it on the daily as well. You just drop down 2 time frames below to see the change in trend, which will indicate the change in phase.
Yeah, perfect. So as you can see, once you know how to read the charts correctly and understand time frame agreement, there's several opportunities out there to be traded, which is where a lot of our momentum-based signals come from. We have tons of events across the UK coming up in London, Manchester and Newcastle. So we hope to see some of you there. And if there's any topics you'd like covered in our next video, please drop us a message and let us know. Thank you.